Hey, my name's Jake Nicholson. Welcome to my YouTube channel. In this video, I want to talk about mortgages. You see, mortgage length is becoming longer and longer. For decades, we've had 25-year mortgages, but now 40-year mortgages are becoming much more common. You've got lots of new lenders, including Barclays, that are offering 40-year mortgages now. But not only that, you've got Donald Trump in America last week saying they're going to launch 50-year mortgages to deal with their housing crisis. And you can definitely expect, if the Americans launch 50-year mortgages, that the banks over here are going to do something very, very similar. So in this video, I'm going to talk about the pros, the cons, what the impact would be on house prices, and much, much more. But before we jump into that, if you're new around here and you haven't done already, do subscribe to the channel over there and hit that bell notification. We've just hit 51,000 subscribers. And by subscribing, you'll get all the latest house price news, all the latest interest rate news, property investing tips, and much, much more. And let's get some views on this video. Your part in that is very simple. All you need to do is smash like, tick or like, do something to that like button. That helps with the YouTube algorithm, and that really has helped the channel grow. So thanks to everyone that watches that. So, we've done content on this channel about 40-year mortgages before. You've got a company called April Mortgages. They're quite a good lender if you want something that's just not a standard mortgage. For example, you can borrow 6.5 times your salary with April Mortgages. You can have a 40-year mortgage as well. So those things are stuff that's a bit different to your standard lender, Santander, HSBC, and people like that. But more lenders are considering these 40-year mortgages, and some have already got them implemented. So 40-year mortgages are going to become way more normal. But it got me thinking this week when I saw Donald Trump talking about 50-year mortgages, and that's his solution to the American housing crisis. So I thought I'd dig into the numbers. I've got ChatGPT to help me with this, honestly. But I thought I'd look at the numbers and see what the difference is in interest rate payments. And should you consider a 50-year mortgage if it got you onto the property ladder? I mean, let's be honest. If you started your mortgage at 20, which not many people can, you're going to be paying it well into your retirement. So maybe this is something that you might not want to consider. But let's have a look at this. So lenders, they don't want house prices to drop. Some people believe that Lloyds want house prices to drop so they can scoop all the properties up really cheap. But in all honesty, they're not buying those properties. They're building properties themselves. So the house prices aren't such an impact to them. When Lloyds are building and then renting out themselves, it's the land price that they're more concerned about. They're not going and buying single family units. They're buying 1,000 units here, 400 units there. That's what they do. So they're not so fussed, but with lending, they don't want people to go into negative equity. And also, they want to lend you as much money as they can because that's how they make money, is keeping you in debt. But they want you to be able to afford the debt. That's important to them. They don't want to overextend you so you can't pay them back, because that's worse. And so lenders are looking at creative solutions to lend you more money. And so a 50-year mortgage is something that you might not see the end of, unfortunately. No one has a crystal ball. You might get ill, you might have an accident, or maybe it's just something that just works out for you and you do see the end of the mortgage, but it's irrelevant. What they're hoping is that you'll just pay them lots of money over decades and then pass it on to somebody, and it's their problem at the end of the day. So let's have a look at the payments here on different levels of mortgages. And so I've worked this out on a 25-year, a 40-year, which is now more common in the UK, and the Trump 50-year mortgage. And let's have a look. Now, these are worked out on a 4% rate. Now, 4% you can get today. You might get cheaper rates then. You might get a higher rate. But let's just work it out on that. So firstly, let's look at the monthly payments. So on a 25-year mortgage, you're going to pay £1,583. On a 40-year mortgage, you're going to pay £1,253. And on a 50-year mortgage, you're going to pay 1,157. So between the 25 and the 50-year, there's a huge difference there in what you're actually going to pay. And that makes a big difference because for some people, maybe they're renting right now, they could afford that, but they couldn't afford that. And so the 50-year option could be something that gets them started in the market. But then how much interest would you end up paying? Let's have a look. So on the 25-year mortgage, let's have a look at that. You're going to pay 175k in interest over that 25-year period. On a 40-year, it jumps massively. You're going to be paying 301,000, so nearly double, not far off. And on a 50-year mortgage, you're going to pay £394,000 in interest. So banks, if they've got a choice of getting a customer that's going to make them 175 grand or 400 grand, that's what they're going to be interested in. So the fact that Donald Trump's talking about this in America, I'm confident that in the next few years, you will start to see these types of mortgages. Now, would I consider this? Let's say I lost all of my properties. I was back working in Burger King where I started out when I bought my first property. Would I take a 50-year mortgage? I would. And I'll tell you why, because I know a lot of you are going to say, but this is crazy. I would if it stopped me paying rent. So if I could get this deal with a 5% deposit so I can get into the deal fairly cheaply, and then I've got that property, then I'm paying down some money. Now, when you have a mortgage, whether it's 50, 40 or 25 years, nothing's stopping you overpaying that mortgage. So I have the option then. So I have an option to pay 10% extra per year. It might change slightly the terms on a different one, but most mortgages you can pay 10% extra of the value of the debt. So if you have a 100 grand mortgage, you can pay 10 grand extra per year to reduce the interest and reduce the term. That gives you the option to do that. So it gets me into the property. It allows me to build up equity. Now I'm going to be building equity on a 50-year mortgage very slowly because the payments are much lower and I'm going to be chipping away less at the balance, if that makes sense. The 25-year, I'm going to be chipping away more at the balance. So I'm going to get equity quicker, but I've got to pay the 1,500 quid, which in this scenario, I can't afford. Now, what I then could do is 5 years later, when I go to refinance that property, there's no rule saying that I can't move on to a 25-year mortgage or a 20-year mortgage or a 20 or a 15-year mortgage. I've got the option to do that. So in that time, house prices will have gone up. Not all the time, but most of the time they will have gone up. I'll have created some equity by paying something down and I would have stopped paying rent. Now, would I stay on a 50-year mortgage for the full duration? No, no chance, because the interest that I'm wasting is such a huge amount of money that I could have used that to buy other properties, or if I was inclined to have a pension, I could use it for that. I wouldn't do that. But what is interesting is it could get some people on the property ladder, and it doesn't matter whether you want to use it or not. What will happen is if these types of projects launch in the UK, which we already have the 40-year, which if I told you 2 years ago you're going to see those around, you'd have said no. Now you'll consider the 50-year. I think someone like April will do that, and then more people will start to do that. Some people will take that, and that brings more buyers into the market, which is positive for people that want house prices to go up. And I think house price momentum would either stabilize or be less likely to drop by doing that. And banks and the Bank of England and the government will look at these kind of things of maybe this is what gets the property market moving again. It might be kicking the can down the road, but these sorts of products are something that could get the market moving again. You might not like them. That's irrelevant. I'm just telling you, these things I think will be coming. Let me know what you think about them in the comments below. And have you checked out our Black Friday offer yet? The Property Accelerator launched over a week ago now. You're going to get instant access to the HMO training, the serviced accommodation training, the lease option training, how you can get properties for £1. You'll also be getting early access to the buy, refurbish, refinance, rent module and rent to rent training as well. These are all separate programs that we're going to sell individually next year for many hundreds of pounds. But now is the best time to buy it on Black Friday. And we've got new stuff that we're adding next year. So by investing now, any new stuff that gets added, you'll also get that. And if you've already invested and you're thinking, he's saying stuff that wasn't on there when I got it, that's coming to you too. So do check that out. It's in the description. It's in the first comment. Do smash like, do subscribe. Tell me what you think about 50-year mortgages in the comments below. And check out all the other content as well on the channel, including this video right here.